that can cause a difference in the APR and make the one lenders look lower. Meanwhile, you're going to close on the day you're going to close. That number is going to be the same, assuming the rate is the same, between the two lenders. It could make the difference in terms of making one lender look better than another. And it's really not accurate.
All right, we're back. It's the South Florida Mortgage Report with Billy May, your non-hat dude wearing mortgage guy. Let me get my hat on. Hold on a second.
Whoa.
Yeah. Well, we were talking about spaghetti westerns earlier, Craig, so I figured I might as well get my cowboy hat on. So
that's right. Nice.
So it's Billy May, your hat dude wearing mortgage guy, along with Craig Garcia. Now, it's Craig Garcia now, president of Capital Partners, not Craig A. Garcia, because he's been compromised, Facebook profile. And Craig, I'm really sorry to hear about your uncle, but is that Range Rover and the Rolex still for sale? I'm just kind of curious.
Bill, it's quite unfortunate, but in this day and age, there's always a lot of shenanigans going on, and people try to rip people off online and on the phone and so forth and so on. And so, my Facebook profile got hacked, and so it is no longer Craig A. Garcia. That's a compromised profile. Hopefully, it's been taken down.
Okay.
But somebody got on there and made it look like I had a sick uncle, and that I was trying to sell a bunch of his stuff. And not fun. Not fun.
Just want to clarify it for our worldwide audience on YouTube, on Apple, and Spotify. Make sure you hit click subscribe, and we're back.
Never send money to somebody that you are only texting with unless you have a verbal conversation. That person, protect yourself. There's a lot
and we're all about
scammers
protecting people and their money. And today's deep dive topic is a good one. It's APR, annual percentage rate. And this is something that there's a big misnomer, if you will, about it, misunderstanding about APR. And we're going to do a deep dive today on our podcast, South Florida Mortgage Report, about APR. And Craig, APR is supposed to be the number that protects you. It's the quote unquote the single honest comparison point that mortgage lenders really can't manipulate. The reason you can shop rates without getting deceived, that's the tagline, so to speak. Here's the problem is it really doesn't work the way people think it does. And two lenders with identical loan terms and the same rate can have different APR, right, Craig?
Yeah, it's they can, and there's a couple different ways that can go down. So we'll kind of talk through some of those examples. But it was an interesting week last week, and I thought that it would be good to kind of get into this because it brought up a couple things regarding that. So I mean the idea behind APR is really good. I mean that's supposed to be to give borrowers one standardized number that captures not just the interest rate but the costs of the loan. Because if I said, hey, you can get a 6% interest rate with no points, or you can get a 5.5% interest rate with 6 points, what's better? What's actually costing you more? The APR is supposed to help you do that, but it does have some nuance to get into. So what's an APR include, right? APR includes the cost of the loan over time, the interest that you're paying on the loan, and it includes certain fees that you're paying at closing. It includes origination fees, points, underwriting and processing fees, broker fees, if there are any, prepaid interest, which is the interest that you pay from the day you close through the end of the month.
That's a key one that can be easily manipulated. You're going to show that to us later on, right?
We are. Yeah, that's right. And mortgage insurance. If you're paying mortgage insurance during the loan, that also gets included in your APR. So it includes a lot. But what it doesn't include is title fees, okay? So it doesn't include lender owner's title fees, doesn't include an appraisal report, doesn't include credit report, home inspection, survey, recording fees, transfer fees, homeowner's insurance, property tax escrows, and really most third-party settlement fees are.
Yes, yeah. There's a lot going on here, so to speak. There definitely is. And like we were kind of saying that, how can we show there's a misleading comparison between two lenders? I mean, do we have a couple of examples we can kind of go through that to show how maybe one lender can maybe manipulate it to make it look like they have a low APR?
So the first example is the closing date issue. And so you go and you ask a lender for an estimate, and you go and ask another lender for an estimate. One lender assumes a closing date of the last day of the month. Okay. The other lender assumes a closing date of the 5th day of the month. And so you wouldn't think that that's that much difference in terms of fees, but actually you're talking about it's almost a whole month of interest, because if you close the last day of the month, you're only paying 1 day of interest on that loan. So on a $400,000 loan, if we're just taking 6.5%, you're only paying $70 on that lender's estimate for the prepaid interest on that deal. Now, the next one person sends you something, and just because of whatever, maybe that's actually when you're closing. You get an estimate for 25 days. Well, that's on a $400,000 loan at 6.5%. That's like $1,780. So that can cause a difference in the APR and make the one lenders look lower. Meanwhile, you're going to close on the day you're going to close. That number is going to be the same, assuming the rate is the same between the two lenders. So that you wouldn't think that that could move it, but it moves it more than you would think. It could make the difference in terms of making one lender look better than another, and it's really
Yeah.
not accurate. That
Yeah,
doesn't
you're
make sense.
not really you have to compare, we've used this phrase before in our industry, you have to really compare apples to apples,
Right.
and, well, you really have to look at, all the fees that they're charging. So, is there any other ways? Is there any other fees, maybe title fees or anything else? Is something they could do that would be different?
So title fees, technically, you could have some shenanigans played with title fees. I would say it's specifically where you're dealing with it really only would be in the event that you had a company that maybe the mortgage company owns the title company, right? So and then what they're doing as a strategy could be that they decide that they are going to keep their APR fees low, but their title fees are going to be more. Technically, they could do that. They could fluff up some of the title fees, lower some of the APR related fees, and ultimately the cash to close could end up being more, even though the APR is lower, because you've got kind of maybe one entity that's in charge of both things on some level that is trying to structure their costs to look a little bit better from that one metric that they know that people will look at. So
Okay.
that's where it could be more helpful to look at your
Right, right, and I know whenever over the years, whenever I've given an estimate, I let my prospective borrowers know that, hey, this although this is estimate, it's gonna be a pretty accurate, it's gonna be very, very close to what you're gonna see at closing because unfortunately, almost anything you buy, buy cars, something like that, they kinda, they get you in the door, and once you're in the door, they kinda they raise fees and everything. I try to be very upfront with people because we don't want to have any surprises, and so we try to be accurate. And I always, and in today's world, I mean, we have software, for example. So let's say hypothetically we have a scenario, we have a contract, we get the contract, and we know who the title company's in, and we have software we can connect to that. Most of the title companies, not all, and
Mhm.
we can pull their fees directly into our estimate. So
Yeah.
we're trying to give as accurate as possible, but that's not always the case because it's not always
Sure.
possible to get the title fees. But yeah, looking at that total cash to close figure is a big one, I think.
Yes. Yeah, no, that definitely helps, but unfortunately there are issues with that too, right, Bill? Because
Sure.
part of your total cash to close is what next. So, like you said, what are you estimating for title? How accurate is your estimate for title? But where I see even some more variations is in what are you assuming and what are you quoting for insurance and property taxes? And it is pretty wild sometimes how we'll see. I would say I see this a little bit more often when you're dealing with either somebody gets a quote from a national bank, or they're dealing
Yes.
with an online lender and a big, maybe a call center environment where you've got
Yeah.
people answering the phones, and they could be answering the phone for somebody. The next call could be somebody in Oklahoma,
Right.
and then they're talking to somebody in New York, and then they're talking to somebody in Southern California, and then they're talking to you in Florida. And their estimate so that cash to close estimate, which should be giving you an idea what you're supposed to come to closing with. I have seen people send estimates to borrowers who are buying in Florida, and they're
Oh,
working with an
yeah.
online lender, and they've got quoted for insurance an amount for insurance that you might get if you were buying a property in.
In Oklahoma.
Yeah.
Yeah,
So
yeah, yeah, yeah.
so somewhere inland that's not affected by hurricanes. And
No.
Florida, unfortunately, one of the greatest places in the world to live, but we have some of the highest homeowners insurance rates in the country because of
Yeah.
hurricanes, because of litigation that's happened historically in the state. And so
Right.
you might be, if you make a decision based on that alone, and you're just not as can't see the whole picture, then that's where you might make the mistake of thinking this other lender looks like they're
True.
it's going to save you money, when in fact part of the reason is they've severely underquoted the insurance.
Yeah.
Why?
That's the big one. Yeah.
Yeah,
That's definitely the big one we see from the big banks, the big online lenders. They're not familiar with our insurance down here, especially in South Florida.
yeah, and that's why we tend to think it's best if you can deal with somebody in this that's located in the state that you're trying to borrow in. That's
Right.
more than likely a good option for you, and certainly over somebody that maybe is just not as familiar. I mean, you could have some people that are out that are familiar with your little local area, but it's
Yeah.
not as common. So,
Yeah.
and we have all kinds of intricacies in Florida in terms of insurance and property taxes.
Yeah. Yeah. Plus, what we do is I always give whenever I give an estimate, I I tell them, "Hey, this is what the taxes are on this specific property you're putting an offer on. Your taxes could change next year when you get reassessed, et cetera, et cetera. But that's the numbers that we use. Whereas a lot of other lenders just may not use that. But getting back to the APR, would the APR differentiate if the homeowner's insurance, hypothetically speaking, was artificially low?
No, the APR won't, and so and that's probably another no, is the insure even though your cash to close might look different if you get a different insurance quotes,
Right.
it's not gonna affect the APR because insurance is
Yeah.
not an APR item like we were talking about before.
Yeah. Yeah.
So,
But that's why I gotta look at the big picture, the
yeah,
cash equivalents, not just that APR, because we know that APR can be
correct.
modified or whatnot. So,
Yeah.
but that is interesting. So now, how about if they escrow taxes and insurance? Does that affect APR?
No, that won't affect it either. I mean, you can escrow, the only thing that potentially could affect it is if you're maybe having to pay a fee. If you didn't wanna escrow your taxes and insurance, you have to pay a fee for that. I think that fee is likely gonna get included in your APR, and so but
Got
most of
it.
the time, I think most people escrow, so most people won't have to worry about that.
Yeah, that is true. That is true. Anything else we need to explain about about annual percentage rate that maybe a prospective buyer should be weary of or think about? And it's not just about the APR.
I think generally speaking, I think especially for people who are buying, I definitely think there's a little bit of danger in selecting your lender based off of just the APR, and
Yes.
because you've got a lot riding on a purchase transaction. It's a big financial transaction whether you're refinancing or buying, but when you're buying, it's definitely even more stuff going on, and the stakes are higher, and you have a deadline, and you have another party who you're under contract with. That's not, and the lender's not a party of your contract. So because there's all this responsibility, you're buying a property, you're going into contract with the seller of the property, and now you need to deliver to that seller by a certain date. And obviously, if you're borrowing the money to be able to close, then that lender represents a huge part of you making that deadline.
Yeah.
And sometimes if you're just looking, so that's why I think, and that's why you've seen that the majority of purchase loans and the trend over the last certainly decade has been that independent mortgage banking companies do the majority of the purchase business and the bank's share has become less because banks aren't great at hitting deadlines
Yeah. No, that's
versus
true. That's
comparatively speaking.
historically Yeah, it's
Yeah,
historically proven in our industry, and one of the things that kind of triggered this whole APR thing, at least for me, is I have a prospective client I'm working with, and the younger generation, they always like to do research online. They go on AI and everything, and
yeah,
she was really kind of nitpicking me about the APR thing, and I explained to her how we get APR, what fees we're talking about. Because then she was asking me, hey, do you work with such and such bank? And she was going to some website, one of these big
sure.
so and so.com bank related, and they're advertising these ridiculous fees. You know what I mean? This ridiculous APR. And I explained to her and I showed her. And one of the things I did bring up was about the closing date, and it makes a difference. And I
Sure.
explained how the APR is. Plus, on top of all that, as you and I know, we've talked about before, all the time, is rates can change daily. Rates can change in the middle of the
Sure.
day. And speaking of rates, we've had a lot of volatility the past couple of weeks for a variety of reasons, and it's kind of it's affected cost because when rates start going up, people start thinking, "Oh, rate APR." So, and that's to start people start, "What's the total cost?" But let's talk about that kind of volatility. What's been going on the past? I don't know. I would say 10 to 14 days, Greg.
Yeah, so we had an inflation report that came out last week that was negative, and obviously that's the whole concern about the Iran war and the price of oil. The price of oil bleeds increases the cost of everything because everything needs to get transported, and oil is the main energy source for all of those goods transporting. So that was negative, and so I think we saw the 10-year hit like a high middle last week, 4.7. It's the highest it's been in 18 months. And then we started getting some good news on the war front and potentially a peace agreement. And so things started getting better. And then over the weekend, we saw some things started to get better again. And then this morning, some extra headlines. So things can change quick. And
Yeah.
so sometimes the rate that you're getting quoted doesn't end up being the rate that you end up getting just because sometimes the market moves fast. So
Oh
that
yeah.
is
Yeah.
that is definitely part of a challenge. And once you get in the door and then you're moving along, obviously things can change. So I would say in a volatile environment like this, I was talking to a group of managers earlier this morning, and the idea of, generally speaking, when rates move, they kind of take the elevator up
Yeah.
and they take the stairs down.
Yeah. Yeah. That's true. Yeah. Yeah.
Because so when they go up, they can go up faster than
Yeah.
they're likely to come down. They usually come down a little bit more gradually, but then when they get worse, they can get worse faster. Doesn't happen all the time that way, but generally
Yeah.
speaking, that's kind of what happens. And so when you have something like this where there's a lot of unknowns, hey, so sometimes you have to be a little cautious. And I would say that in an environment where more stuff is going on, that's kind of where we are now. So
Yeah. No, that's a great analogy, elevator upstairs down, because that's I've always tell people they go up really fast, but unfortunately they come down slower. So like if you look at the bond market to this morning as composed to last week, oh boy, it's big differences, like what 4.47 or something of that nature. And we had like 4.7 last week. You would think, oh boy, there's a big swing right there, but the swing in rate isn't there yet because it's always a little lagging, a little behind. So
yeah, it's not the 10-year treasury is a good bellwether for mortgage rates, but it doesn't mean that move in lockstep. They don't always move in lockstep like that. So,
yeah.
but generally speaking, it's an easier thing for people to look at. You can find a 10-year treasury rate posted everywhere, which is helpful. So,
Yeah. Yeah. So speaking of that, so if a buyer is under a contract right now, practically speaking, I mean, what should we recommend someone who's not closing for, let's say, 30 to 45 days? Hey, do we lock? Do we float? Or what do you think?
so my feeling would be is if you're comfortable with the payment, I would be more inclined. I'd probably be more inclined to lock because of the volatility. I think that the environment and there's like I just said, you could be waiting and to float and try to get a lower rate, and so now you're waiting for the steps to come down. But any minute, somebody could hit the button and the elevator could go up.
Right.
All it takes is a tweet from somebody on either side of this conflict, and it seems to be pretty fragile right now. So, and even if everything is, yeah, it looks like there's a peace deal and everything, I don't know that the price of oil and everything. It's still going to be some volatility ahead, I think, until things get sorted out. So,
No,
so
I agree. Yeah, I agree. I have a buyer right now. We've had on our contract. We've had our application for about 5 weeks now. They went to application back early April. At that time, I informed them it wasn't closing until June 8th, and explained at that time, hey, you're not closing for 60 days. Here's what the rate looks like. And he's
yeah,
a younger guy and
sure,
kind of savvy. He's like, no, no, just keep floating. So I've been kind of once a week pecking him, hey, this is where
sure,
we are. And of course, the past 2 weeks have been a little chaotic. And then last week, he and I had a serious conversation or earlier in the week. And I explained to him, hey, listen, you might want to consider locking where we are right now. Could get worse. And he decided to keep floating. But it's funny, as of this morning, we're kind of almost getting back to where we were back in early April. So he and I are going to have a conversation here shortly. We may want to consider locking today because it might get back to where he was back in early April.
sure, sure, good.
So what else is going on with numbers? What about like the CPI numbers and what's going on with the Fed chair? We got the new guy. He's holding his first press conference here pretty soon, right? Kevin Warsh.
Yes. So his first conference as Fed chair is the June 17th meeting. So that he gets a chance to address the nation for the first time, set the tone probably for the rest of the year. So I do think that everybody's going to have pay a lot of attention to the inflation numbers. There's a big inflation number that comes out every month, and so that's what everybody will be watching. I think to see how is this being is the increase in the oil price being passed on to consumers, or are the companies kind of eating it in the short term? I think that's what people are looking for, and how sticky. We've heard this, and I can't believe Besson said it the other day, but he talked about he said the word transient again when it comes to inflation, and we've all heard how that went the last time.
Yeah,
Different
that was not
situation.
good.
That was COVID, and they printed a ton of money, so much money that got flooded in and everything. And that's where the transient inflation came from. But I was surprised to hear Besson use that same word just recently. So, but yeah, keep your eye on inflation reports and what Warsh has to say on June 17th. That should be pretty interesting. And to see, yeah, it's the first time in a while we've had a new voice there, and I think a lot of people will be interested in how that goes.
Yeah. As far as mortgage rates are concerned, and kind of where we are, I'm kind of quoting people like right in that 6.5 kind of range right now. It could be slightly lower, slightly higher, depending on upon a number of factors. And that's kind of where that, instead of talking about the APR, we talk about that, but hey, APR is dependent on some factors here. We discussed that, but mortgage rates are this is where they are right now. Not really sure where we're heading. And like you said, if you're cautious, probably would be talked about probably locking in because especially now after this morning's in the news and so forth, maybe lock in the next few days if you're going to be going to contract here soon. So, but people, I always like Craig, get people call me and ask me, hey, I have one of my past clients. He's went to contract over the weekend. He's like, Bill, do you think we'll get down by around that 6%? I'm like, I don't know about that. I wouldn't bet on that. I call more in that 6.5 range. If you could get to 6%, if you want to pay points, you could probably get there. You're gonna pay a number of points, but
Yeah, or you can if you're in a process of negotiating, you can negotiate to get some of that to happen. So have a seller pay some points.
uh
That's certainly still something that we're seeing happening in the market right now. So yeah, no, as volatile as things have been, the bond market's been relatively resilient still. So that's the good news. And so hopefully, even if things get a little wonky, and the fact that we're still kind of where we are is pretty encouraging in spite of the fact that how much oil prices have spiked. So
yeah. Speaking of rates and about like realtors, I mean, when we had Brad White on here, I think it was our last podcast, I believe. He right off the bat's like, I'm not concerned with that. He's like,
yeah,
we don't, I don't get in that conversation with people. Hey, we got people when they want to buy a place. This is what the costs are. It is what it is. So it's
sure.
amazing how some realtors they get kind of hung up on that, and then I think they kind of use that as a crutch sometimes. It's like, oh, people aren't buying now for whatever reason. But and his thing, he's like, listen, people are coming here. But his business is a little different too. He's got a lot of people just relocating to North Florida, but it didn't seem like his clients were really too concerned. I mean, this is reality. Now we this is like for 4 years now, Craig. We've been above that. Remember, the market started up 4 years ago with mortgage rate. We got in the whole 2010s. They got comfortable with those rates sub 5%. But really, we're 4 years into this now. So,
I think that this speaks to having a bit of a strategy about where your business is coming from too. I mean, Brad's has very smartly looked and sought after people who did exactly what he did. He relocated here, and so
right.
he really looked for that niche of, hey, let me help you do what I did, and I love it down here. And so yeah, that segment of buyers that's changing their whole lifestyle and coming from up north and moving down here, certainly going to be less rate sensitive than somebody who's sitting in their house that that they locked in on a sub 4 interest rate that
Yeah.
isn't as interested in moving because their cost to move is going to be a lot more expensive than that. So yeah, so it definitely having multiple ways of finding your clientele as opposed to just the people who you've cultivated in this area that live in this area. Uh, it probably speaks to a little bit of having a strategy around that because people move to Florida every day. It's a great place to live, and those
Yeah.
people are definitely less rate sensitive than somebody who is already here
Yeah,
sitting on
maybe a
a
move up
river.
buyer. Maybe there's somebody who bought a house 6, 7 years ago, $400,000. Now it's worth 700,000. They want to sell it and maybe buy something else. That makes sense. That's understandable. But you haven't seen that if you're a realtor or referral partner. If you haven't seen our last podcast with Brad White, he's a funny guy, very interesting, and he had some great points about how he's building his business through social media. So
Yeah,
really,
no, it
really,
was very, very eye-opening. I thought, and I think if you're a real estate agent listening to this and you haven't seen that one, I think you definitely get some ideas for your business out of that episode.
absolutely. So let's talk about what are some takeaways we got for today's podcast, Craig. We kind of dove into the APR, kind of what makes APR, what doesn't make APR, and what are some of the other things that
Yeah, I think I definitely would say don't go shopping just based on APR. You want to get a little bit more comfortable with what you're doing and what the fees represent and the estimates that's being used. Are they reasonable for what you're really looking at? Certainly having somebody that you and I do think that you have to take this accountability piece, which is not something a lot of people like to talk about. They just go, hey, what they like to look at the rate and the APR, but this huge financial transaction, one of the biggest financial transactions you're gonna undergo in your life. Do you have a team behind you that's gonna help you get to the finish line on time? Because yeah, if you go chase $50 a month in a payment, in a perceived lower payment, but now you can't get somebody on the phone when you're up at your deadline, and now you got to pay some kind of an extension fee on your contract, or God forbid you don't get approved, or you go past your deadline, and now suddenly your earnest money is at risk. Earnest money deposits in Florida are pretty substantial, five
Yeah.
$20,000, and nobody wants to find themselves in a situation like that because they put all their eggs in a basket where there's nobody else in their transaction is able to hold anybody accountable to on where the money's coming from at that lender. And
Yeah.
so that's where I think having local accountable people that are tied in with the local real estate community, there's a value there that I think that is important. But and people like that can give you realistic numbers for taxes and insurance. And so at least when you're having those conversations and you're comparing it against other options, at least you have a little bit more. You're probably going to get a better education from the local people than you are from the national call center type of places too. And then you can
Yeah.
make an informed decision about what you want to do. And so certainly we help people look at compare options on a regular basis. Most of the time, when we look at the comparison and you try to make it apples to apples, it's usually very close. Usually, there's not that much of a difference between lenders. Certainly, when you're looking at the same type of, the service levels that you could expect.
Yeah.
And I think I think you got to really take that seriously if you're looking. Certainly, if you're in a purchase deal, but anytime you're in a huge financial transaction like that, I think the team that you have working behind you to help you get where you're trying to go is probably paramount.
Yeah, it's definitely it's a APR. You really got to dig deep and explain to borrowers, what's included, what's not included, and it's always about comparing apples to apples. I have a client of mine that their insurance agent that I work with and I know and trust had given them a quote, and sometime the quote was 4 or 5 weeks ago. They came back and then they said, "Hey, that quote's no longer available. Here's another company that I could provide you. Here's the premium. It was higher." The buyer was like, "All right, let me shop around." So the buyer went out and got a quote from another insurance agent. Now these quotes are the same. They're from the same insurance company, but different agents. Their quote was lower.
Yeah.
When the first insurance agent that I work with looked at it, he says, "Well, wait a minute. There's only $10,000 worth of water damage on that particular insurance policy. So even though it was like $200 cheaper for the whole year, he's like, that's a huge difference." So I always explain to people, listen, especially with insurance, you really got to be comparing apples to apples and coverages and so forth. Because the coverages, especially with insurance, there's a few things they can do to make a big difference on your coverage.
Yeah, insurance there's definitely a lot of different levers that you can pull to get
Right.
to change the what your coverage is like, and then obviously that
Right.
changes the premium. So
Yeah, yeah. But just like our APR, like you
yeah,
said, the APR is certain cost here. You know what I mean? So our estimate, we're going to go through it with you. We're going to show you here. This is what these are the costs that are going to affect your APR. This is what our quote is. So that's why total cash flows for the figure is definitely more accurate. So good stuff. We're back from the long weekend, or we're rocking, ready to rock and roll here and everything. The rates. Let's hope that today's a good day for rates. Let's hope this continues this week and they keep the trend downwards. That'd be great.
yeah.
And
Listen, peace in the Middle East
yeah.
would be good for everybody on a multitude of levels. Let's hope something sticks.
Absolutely. Sounds good. All right, Craig. Well, listen, you have yourself a great week, partner,
You
and
too
we will see you
at the
at the
closing table.
closing table. All right.